The GEO Group is not your typical Wall Street darling, yet it has quietly become one of the most consistent performers in a controversial but essential industry. While others chase hype, this company stacks cash from a system built to never sleep. Headquartered in Boca Raton, Florida, GEO Group operates over 100 secure facilities across the globe. These include prisons, processing centers, and community reentry locations totaling nearly 79,000 beds. GEO's core revenue engine? Government contracts that pay per inmate per day, secured with multi-year guarantees from federal, state, and local agencies. It's not just warehousing bodies. GEO provides services like transportation, food, rehabilitation, and mental health treatment, each one a separate billing line. Their other division, GEO Care, offers reentry and electronic monitoring programs across the country. That means GEO is making money even after inmates are released. Their BI subsidiary runs ankle monitors, probation check-ins, and community corrections tools. Think recurring revenue from the justice system without the walls. Critics call it morally murky, but the cash doesn't lie. GEO generated over $2.4 billion in 2024. Their net income in 2024 was just shy of $32 million, but the story gets clearer when you track the trend. Over the past 4 years, the company has posted a compound annual growth rate of approximately 33% a year on average. That growth isn't accidental. GEO has optimized cash flow through cost controls, facility upgrades, and lean headcount models. Their average facility occupancy hovers above 85%. High demand and fixed capacity create natural pricing power in long-term government deals. In many ways, GEO is a real estate company with razor-sharp legal insulation. They own most of their properties outright, offering inflation protection and steady book value appreciation. Their average per diem contract nets them between $65 to $100 per inmate per day. Multiply that by tens of thousands of inmates, and you get a machine. While headlines focus on tech and EVs, GEO quietly compounds wealth in the background. Its 4-year CAGR shows the power of consistency over hype. In an age of volatility, GEO's returns offer a hedge built on legal contracts and public necessity. The need for detention and reentry services doesn't ebb with the stock market. Investors chasing the next AI winner might miss what's right in front of them. Real cash flow, real contracts, and a 4-year performance that beats most of the NASDAQ. GEO is even more attractive to dividend hunters. After reinstating their dividend post-COVID, the company is targeting aggressive capital returns through debt reduction and buybacks. And here's the kicker, GEO is still trading at a forward PE of under 10. That's deep value in an overheated market. They've also drastically improved their balance sheet. Total debt has been reduced by hundreds of millions over the past 2 years. They used a high-interest environment to lock in long-term federal renewals. That means revenue clarity through at least 2030. The company is also expanding electronically. GEO Care services around 9,000 people under supervision outside traditional walls. In many cities, parole and probation departments outsource their operations to GEO's software. Think of it as SaaS, but for sentencing. GEO's tech-enabled reintegration tools give local agencies visibility without the overhead, and they get paid every step of the way. These services are often backed by grants or public contracts. No customer acquisition cost, just multi-year agreements that renew like clockwork. This is why smart institutional investors are quietly adding GEO to their portfolios. BlackRock, Vanguard, and State Street are all top holders. GEO's facilities are not just cages, they're financial hubs. Each building can generate millions per year in EBITDA. Despite public criticism, the company maintains high renewal rates. Politicians talk, but budgets win elections, and GEO provides cost-effective solutions. Their largest customer is the U.S. Marshals Service, followed by ICE and the Federal Bureau of Prisons. Together, federal clients make up the majority of annual revenue. Internationally, GEO has centers in Australia and South Africa. That global footprint adds diversification that most correctional REITs lack. They also own the tech stack used to manage inmate records, visitation systems, and behavioral tracking. Vertical integration gives GEO complete control and maximum profit margin. They have survived lawsuits, protests, and political waves. Through it all, cash keeps coming in and facilities keep filling. While public opinion shifts, GEO adjusts its branding. Secure solutions, community reentry, and rehabilitation support are all part of the narrative now. The truth? GEO's financial model thrives in both hard and soft on crime administrations. When prison reform slows down, GEO wins with volume. When reform picks up, GEO wins through reentry contracts. Their margins are highest in hybrid models, halfway houses, day reporting centers, and virtual check-ins. This is where the growth lies. CAGR over 4 years proves GEO doesn't just survive, it evolves. A 33% compound return is a signal, not noise. In a portfolio full of hype, GEO brings structure. Cash, contracts, real estate, and a growing digital footprint. Even with controversy, Wall Street respects results. And GEO is delivering those results every quarter. If you're looking for cash flow in a chaotic market, GEO is worth a deeper look. Because the real money is in the boring, the regulated, and the necessary. They don't need to trend on Twitter. They just need to get paid, per inmate, per day, every day. As new facilities open in states like Michigan and Texas, growth continues. Local governments need space, and GEO has the beds. The company's Michigan contract alone is worth over $1 billion over 15 years. That's locked-in income for over a decade. With low capex needs and rising margins, GEO is positioned for sustained returns. No moonshot needed, just math and manpower. So while the media debates ethics, investors are quietly collecting checks. And GEO Group's 33% CAGR is shouting what the headlines won't. Sustainability in a very uncertain world.